Perhaps you want to start investing, but you just don't know where to start, then this video is for you. Hello, my name's Rachel and welcome back to the channel. So I actually bought my first book on investing back in 2012, and actually it took me 6 whole years until 2018 to actually start making investments. So what I want to do for you today is speed up that process and give you all of the information that you might need to get started investing and to see some very real and profitable returns from your investments. I also want to make this video very, very simple. Now, the reason it took me 6 years to start investing was because the book that I read gave lots of information about picking individual stocks and shares, and it was quite confusing. Whereas in this video, I'm going to give you the most simple option for starting to invest that will still make you good returns. The first thing that you want to do is open up a stocks and shares ISA. They're sometimes referred to as investment ISAs, and if you are in the US, it is something like a Roth IRA. So in my own personal investment ISA this year, I have made just over 21%. So this is the main place that I'm going to be doing my investing, and I'm going to tell you why a stocks and shares ISA is the best place to invest. So in a stocks and shares ISA, you can invest up to £20,000 every tax year, and this money will not be subject to capital gains tax. So it's a really good way of investing because any profit that you make, you are not going to be taxed on. So that is why I invest the majority of my money in a stocks and shares ISA. Now, I do have some videos where I compare different stocks and shares ISAs, but to give you a very quick rundown, the platforms that I currently use are Trading 212. I also have a stocks and shares ISA with Barclays Smart Investor where I have the majority of my money. You can open up, because the rules have changed now, you can actually have several different stocks and shares ISAs. So I prefer to have the majority of my money in one, just so I can see the performance of that stocks and shares ISA. But if you wanted to, you could take advantage of having several different stocks and shares ISAs. Other companies that I use to invest in, I also use AJ Bell for my self-invested personal pension, and I also use Hargreaves Lansdown for my children's junior ISAs. So you can invest up to £9,000 in a junior ISA for your child every year. And again, any gains from that will not be subject to capital gains tax. But today we are sticking to you opening a stocks and shares ISA and focusing on investments for yourself. Other platforms that I've used in the past are Fidelity as well. And then also a lot of people really like using the Vanguard investment ISA platform or stocks and shares platform. What I would say about Vanguard is that if you invest with Vanguard, you are limited to investing in only their investments, whereas the other options that I gave you, so for example, Trading 212, Barclays Smart Investor, Hargreaves Lansdown and AJ Bell, there is much more opportunity to invest in different investment options rather than just sticking to Vanguard. Okay, so you've opened up a stocks and shares ISA and you are ready to start investing. Now, you're probably thinking, I have no idea what to invest in, and sometimes this can be the really scary bit, and this can be what stops you from investing. Certainly for me, this is what held me back from starting to invest, because I did think that I had to invest in individual stocks and shares and go out and do some research on, say, for example, Microsoft, and have a look at their financial reports and buy shares in them. But actually, what I do now is much more simple. And as I said, in my stocks and shares ISA, I have seen gains of over 21% this year, and I haven't had to pick an individual stock for myself, because what I tend to invest in is ETFs or exchange traded funds or index funds. So an exchange traded fund simply tracks a specific market. So rather than going out and buying individual stocks and shares from different companies and having to do the research on them and worrying about whether their price might fall or whether they look like a company that will be very profitable, what you can do is go away and simply make one single investment in a basket of different stocks. So one of the exchange traded funds that you've probably heard about is the S&P 500, and this is the top 500 companies in the US. Now, what can really put your mind at ease as a beginner investor is that there is 100 years worth of data and past performance of the S&P 500. And over the last 100 years, on average, the S&P 500 has achieved a return of just over 10% a year. So that is obviously phenomenal, and that is also much higher than you would be seeing in even a high interest savings account in the year. But what's really important to remember is when you're investing in the stock market, past performance is not always indicative of future performance, and also that 10% that you've seen in the S&P 500 will be made up of years that have done exceptionally well, and there will also be years and times in there that have done very badly, and the S&P 500 can lose money in a day, a week or a year, and it can also make a lot of money in a day, a week or a year. So the returns that you're going to see will fluctuate over the years, and over the past 100 years on average it's achieved a return of just over 10%. There are many different ETFs that you can invest in, so you can invest in a slice of the whole world by investing in something like a FTSE All World ETF. I actually have a video here, and with that you're getting access to thousands of different companies across the whole world, so you're not focused on just the US market, you're getting a good level of diversity from across the world. You can also choose to invest in an ETF that's focused on a specific area that you are interested in. So for example, I personally hold a technology focused ETF as well. So the one that I'm currently holding is IITU, which is the iShares Information Technology Sector ETF. The All World ETF that I'm currently holding is the Invesco FTSE All World ETF, simply because they have very low fees. So it's worth checking out the fees of the ETFs that you are looking to invest in, because fees really do compound over time. But as a rule, as ETFs are passively managed, so they are not managed by an active fund manager, the fees for investing in an exchange traded fund are much lower than if you were to invest in something like a mutual fund, which is an actively managed fund that would be managed by a person or a company. Research has shown time and time again that actually tracking an index has outperformed these actively managed funds over, for example, 10 years. So if you're just starting out, I would urge you to look at investing in exchange traded funds or index funds, because they're a really simple way of investing, and you don't want to get bogged down in investing in different stocks and shares and having to do that level of research. And also it's quite stressful, and what you don't want is to start investing and invest in a stock that you think will do really well, and you have just that one investment, it does very badly, puts you off, and you are out of the market and you stop investing. Whereas with ETFs, as I said, because you are holding a basket of different stocks, you have that diversity in your portfolio and you're really lowering your levels of risk. Now, by all means, if you do want to invest in individual stocks and shares, potentially you could look at having 5 to 10% of your portfolio in individual stocks and shares if you're interested in doing that. But I do think as a beginner, investing in ETFs is a really fantastic way to get started. Now, as always, this isn't financial advice, and past performance is not indicative of future performance, and you can lose your money in the stock market. So please do your own research. And then the last thing I will say about investing is that it is great to do it for the long term. So if you are starting to invest, if you can look at setting up a direct debit into an investment account and dollar cost averaging or pound cost averaging if you're in the UK every single month and buying into the market every single month, then you're likely to be riding out to those peaks and troughs in the market. So setting up a direct debit so you don't have to think about investing, it's just done, is absolutely fantastic. And then the last thing that you want to do when you start investing is to get excited about it. Feel proud of yourself that you've managed to have the discipline to set some money aside to really invest in your future and to watch that money grow. There is a real beauty in compound interest, and if I'm perfectly honest, I like to sit down and do a good compound interest calculation every now and then just to get an idea of how much money I may have in the future. So let's have a look. If you were to invest £100 today, and let's say you're investing in the S&P 500 and it does perform how it has done historically, obviously this might not be the case, then you'd be getting around about 10% a year. Let's say you did this for 10 years and you just put in £100 a month. After 10 years, you'd have just over £20,000. And of that, the money that you will have made from those investments is £8,655.20. So that's money that you haven't put in to your investments, it's money that you have made. So you can really see here that £100 every single month can really compound over time. If you do have any comments, please do pop them in the comments down below. I am not a financial advisor, but I do try to get back to the comments that are made on my videos. And I hope you all have a fantastic year. Thank you so much for watching, and bye-bye.